Thank you to Shark Indicators for the opportunity to present to my customers and their customers a product that I've used from the very beginning, and which was one that actually brought me to the Ninja Trader ecosystem. So my name is Raul Jimenez, and the Chief Technology Officer, owner, and creator of the iCinDER Cycles Indicator. And today we're going to talk about market timing and using the product in a longer time frame that some of you have been used to in my previous webinars. I actually am posting the disclosure disclaimer there again, just so that it's on the slides, and we'll jump right into the presentation. So some of you have known me for quite a while. I'm a trader. I'm a software systems developer. I have a degree in business administration and computers information systems. The majority of the time in my prior years was basically uh, implementing systems, business systems, and accounting systems as a technology product. In other words, with the user and implementation of computers. And so that's how I began with the trading environment. In the early years, just like most of us, we decided we're going to start trading and we need to go and find different ways of trading. And we looked at methodologies, we looked at presentations from other folks, and that's how we begin. So my early years on trading were just like everyone else's. Some wins, some losses, sometimes exciting wins with large amounts of money, and sometimes, large losses, which took away everything that I had before. So one of the things that happened is I kept on searching for a methodology for something, and I kept on thinking, well, everyone is trying to sell me something, and they tell me that what they have works, and when I go and I use it, it doesn't work as well as it ought to. So due to my background also in higher math, I started looking at basically cycles, and the perspective that I took is to look at differentials. In other words, to look at momentum, the momentum of momentum, which is velocity, and then through that create a fractal, and that fractal basically would give me trend direction. And because of the way that I extracted the fractal, it would also have an implied market strength. So this was developed in 2006. Before 2006, I was actually doing all the calculations by hand. And I was working for a big software company. And so what I would do is I would actually only trade options. And it's basically there were 1 day, 2 day trades. Calculate at night, put my entries in. The next day they execute with a specific target for exit or a specific target for a loss. And so that's how it all began. The original algorithm is called iCinDER, which is cycle indicator. And we all know about entropy, which is the disarray of molecules. And so it's a resolver of entropy of the market. Now, as attempting to look at the chaos in the market, and out of that, extract something that is valid. So as part of the agenda today, we're going to look at a new way of using, at least new from the perspective of what's been covered over the last 5 or 6 years, where we concentrated basically on day trading. The indicators have been updated, and a specific analysis pack was created for market timing. If I could mention at this point this, the original in 2006, 2007, when the indicator was created, it was specifically created for the sole purpose of market timing. So in early 2007, when as the market started going down, I exited at that time, and so this became the model that I used going forward. And then, of course, it was implemented into day trading and other methods. So why the new updates? A new updater looking back at cycles and looking back, in essence, at the beginning of the company. What was the original purpose of the company? And today, with all the disarray that we have in the market, and trading is become a little bit more difficult than it used to be. So we have to take a look at the longer time frames and see whether at the longer time frames we can capture uh, profits that way. As part of this, you will have an introduction to the cycles for market timing, specific for that. And needless to say, and this is something that is being probably about a year in the making, NT8 development stopped in January when it was called code complete. And then only minor bugs have been fixed since then. So I've had the code now since January. One of the key things that I was looking for was for shark indicators to introduce their product for NT8. And of course, that's here today. And what? Well, all the NT8 indicators are integrated with BloodHound that also can be used for analysis of the models with Blackbird. And that's one of the things that we're going to look at today. So let's jump to kind of a little bit of recap. Trader challenges. And I mentioned, like we search for tools, we search for items, such as different types of indicators. And in search for tools, it's like the little caveat that I like to give everyone. Whenever you see a presentation, and in this slide, you actually see that range bar is what's used. In some cases, people use range bars because range bars give you, or Renko bars, they give you a beautiful view of something that appears tradable. And I can say, okay, you can enter here at the top and look nice, move to the downside. There's a couple of little corrective patterns there, and so you can make money. What you find out is it's really, 14.15 to 14.17, that big move all the way on the left only took 2 minutes. So what does it take us to? Well, we got to understand what an indicator measures. We got to understand what bars show us, because this is all a visualization tool. And the visualization tool, sometimes if we don't have the understanding as to what is taking place, we can make mistakes. We can think that a model that appears good visually can also work effectively in real trading, which takes us to algo trading versus retail trading. When we're in the retail side, we don't get to look at everything that's going behind the scenes. We actually are reactionary traders. We use tools that attempt to measure something that is taking place in the market. And what we're measuring, in essence, is price movement, or we're measuring time. And if we get into the day trading piece, then we start looking at the internals of the market forces that move price, because the market is fractal in nature. In other words, you have movements in waves and so on. We see that there are cycles. So in essence, searching for tools, we try to look for tools that will closely match the fractal nature of the market and show us or visualize the cycles that are taking movement. So in this presentation, we're going to look at trading for the longer term. We're not going to look at range bars. We're not going to look at Renko bars. We're going to look at day bars. So it's going to be daily charts. As part of our understanding, two things. One of them is momentum, which momentum is that momentary change in direction which can take place. And usually you can ascertain this by looking at 3 or 4 bars where you see as exchange. And the lowest parts of the chart there, you can actually see a movement and momentum change. The other thing that we should understand is velocity, which what is velocity? Well, velocity is, you could say, the momentum of change, or rate of change. So it tells us how fast that momentum is moving, whether it still has legs. In other words, is it still moving up or is it going sideways? Is it losing the speed that it had before? And we'll be able to see that as we looked at the cycles. In market timing for swing and position trading, and this is the actual chart that we're going to use, one like this, there's only going to be basically about 5 indicators. That's it. And then to be able to make the analysis as to what's taking place, because we're going to look at a number of different objects here, we use BloodHound, and BloodHound will give us the signals, and we're going to cover in the demo all those things. So timing the market, number one, structure indicators using daily data or 60-minute data. On 60-minute data, you generally will have from a week to 42-day move. In other words, a view towards a cycle moving in a specific direction. We're going to use Bloodhound assisted analysis. We're going to look, as part of timing the market, Blackbird backtesting to see whether the model is actually a model that will trade longs and shorts, shorts only, with pullbacks in the market, or just basically longs, trend following. The data that we use, we don't need, tick data or anything of the sort. All we need is daily data and or minute data. Most of the time on the models that are covered here will be shown in daily data. One of the things is we're going to understand structure and look at structure so we can see the pullbacks and the corrective patterns. And we're going to apply this methodology, and we're going to be consistent in application because we're going to implement it through BloodHound. As a quick thing here, some of you, and I looked at the names here, some of you are already my customers, and some of you actually have all the software that I'm going to cover here. But if you want to apply what you have to market timing, take basically a screenshot of this. You only need the 3 cycle indicators. The I is intermediate, the M is major, and the S is the minor. Yeah, iCinDER Ranger is an optional one that you would need. The V2 stochastics, again, optional. The heat map CF, cycle force, basically takes the cycles and looks at slope and whether or not they're positive or negative in relationship to a zero line. The other thing that you have is cycle VF, and you'll see that it's actually shown or will be shown in the price pane, and the relationship of price to the cycles BF, the cycles BF being 3 specific levels of strength: minor, intermediate, and major. And they're supporting cycles to the movement of the market. A relationship where price moves against those levels is in essence a pullback or a corrective pattern. With that, I'm actually going to jump to the demo because we're going to spend the majority of the time in the demos. So let me take a little swig of water and then we'll go with that. All the questions are going to be answered at the end of the presentation. So let me go ahead and change screens at this moment. Okay. I'm going to place a chart there, and I'm going to show you what else I have. This is actually part of the workspace that you will get. And the workspace has 2 things. I'm going to move it just a little bit here. And it's going to have a market analyzer. And this is going to be, the data that I'm using is kinetic data. So I do have a number of the symbols that are indices. And then I actually put some of the sectors, the ones with the X, biotech, materials, and so on, and the diamonds, the spiders, and the Qs, and gold miners, which are some of them that are the common ones that I used to trade way back starting in 2007. So I'm going to move that out of the way. I'm going to show the principles of market timing. All the way at the top over here, and I'll go ahead and I'll go through properties of each of them. What we have there is the cycle's velocity force. And generally what we do is you change it or put an EMA of 8, and that's to be able to show basically a line that is a moving average. That's all. That's the only purpose for that. And also, if you do that, all the other calculations that are done, if they have any type of moving average piece to it, will also be calculated through an EMA uh, algorithm that I created. There are different things that you can plot. Visual cycle 1 is the minor, and you can change colors and thickness on them. And cycle 3, the gold, is the major cycle. You can turn them on and off. So let's go ahead and show this. So now we have a number of things that we have some inflection points. So I'm going to put a couple of markers. So what's taking place here? Price was below the major cycle. In other words, we actually have a bearish bias over here on the left. Now this is without using BloodHound. BloodHound is going to paint all this for us. Then price hit the intermediate cycle, moves down below the minor cycle, stays there. When price begins to move against the trend, generally will touch first the minor cycle, then the intermediate, and the final crossover takes place over the major cycle. So when I press the arrow at that point, we have an inflection, and you see that the heat map over here tells you there's a movement to the, it basically is green. It's telling you that 6 things took place. The slope of this in the indicators here are positive, hence green, and they go from weakest to strongest. Above zero, minor, intermediate, major. Then it also looks at the slopes. So when they all agree, it will paint you a green line, basically a green box. And those are areas where you actually have the earliest warning that you can actually have as to a movement to the top side. In other words, a reversal of the trend. And so we have actually a movement of a trend. Then what happens? Well, the intermediate cycle acts as support. As it breaks down, and actually you see it here, 926, that was actually a signal for a short. In other words, exit the market because we're only going to look at the market going long. The ones on the bottom is nothing more than the cycles minor, the bluish one is intermediate, and the gold and brown is major. The relationship of those cycles to the zero line, and let's see, zero line. I'm going to make it actually, I'm going to make it a little bit bigger. Let's go ahead and let's make it 3 over here. The relationship of the cycles to the zero line, if you see, in other words, right here, we see the minor cycle above zero. That is telling you at this level right here, at that point, that the minor cycle is supporting a movement to the bullish side. Then the intermediate cycle crosses over, and finally the major crosses over. And that's about the point that they're all now positive. So the implication there, or it's implied that we are in a bullish bias. At the bottoms, when you actually see them all cross over like this, those are basically bottoms and tops in the market. Sometimes there are multiple ones because this is looking at velocity. Velocity can move down and price can still continue to move up. And that's one of the things that you actually have a divergence and you see, well, this is going down, but it's not matching 100% what is taking place with price. And that's because of the extraction and the multifaceted. There are about 32 dimensions that are measured in those indicators. And then they're moved into, like, let's say a minor cycle, intermediate cycle, a major cycle, and then they come up with a specific type of fractal. So we have the 3 things. Now, the little lines that you see here, red and so on, that's nothing more than when you actually you could say that's an overbought, oversold. Is where a point where you actually have the velocity overextended. It's just overextended, so the probability of reversals are become greater, and they actually give you an idea as to where you are maybe having a reversal of the trend. So if we look at, I got the S&P 500, the same thing, Dow Jones Industrial Average. So basically, what you can do, and I'm going to switch now. So if I wanted to now, and I want to look at GLD gold, I can just click on it, and instantaneously it changes. So what took place? If we look at gold, right? We have a bottom, we have a super really really extended level right here. We see them all turn all at once, but you see actually turn over here too, right? So sometimes you have to look at the extension and the strength of the extension and how far the price is from those bars. So if you see a price is beginning to touch the minor, touches the intermediate, they always coil on reversals. What you will find is that they coil. I always gotta make sure that this is off. It turns itself on every once in a while. So we have over here coiling, and we also have coiling over here. And those are areas where you see reversals. So there are a number of things when we're trading and we have a longer view. In other words, we're looking at daily data. Well, what happens then is we are, in essence, well, let me make sure that I put this here. We're looking at a movement that is much slower. So the ability to react is, you could say, is slowed down. Because when if this was something that we were trading as day trading, we would have to react a lot quicker. This time it gives us time to absorb news, absorb a number of other things before we go ahead and make decisions. Any questions so far? Okay, so I'll continue with this. The diamonds, the same thing. So basically what happened, this actually, you see here, this move here, October 10th. The first time that it actually crossed was October 4th. And some of you that are my customers that got the invitation, you also got access to the email that I sent on the 4th and a follow-up one that I did, basically showing market timing and how it was a time to basically look at what you had and either protect the throughputs or to exit some of the positions because of weakness in the market. And even visually, if you go ahead and crunch this up, the amount of red on the heat map can also give you an idea as to what's taking place in the market. So there's the 11th, weakness starts over here on the 5th, consolidates in the 11th, and you see the rest of the movement there in the market. So this is the basics of market timing. And it's very simple. We don't have to be, I mean, we can look at this at the end of the day. We can look at it in the morning. We don't have to be tied to the computer all day long. Let's go ahead and jump now to another workspace. And this is kind of putting it all together. I'm going to put one chart at a time. First of all, I'm going to put one here, which is the market timing one. I'm going to add one additional indicator there. And you can find any indicator that will give us basically support and resistance. I like to look at things from the perspective of velocity. And so I wrote a piece of software for myself, and it's velocity levels. And velocity levels, when I put that in, it gives me areas where velocity changed. So I know that that's an area of support over here at 2654. There were a number of areas of that where there was a movement. So um, let's go like this. What am I looking at now? Okay, see, This line was drawn right here on the 29th. That's a resistance line. Price moved down. There had been another one that was support line, and this one was drawn on the 12th. The one after that was drawn on the 22nd. So you can see that there's actually number of levels of support that are drawn because it's a velocity shift. Comes back, touches the velocity shift. We're closing down at 36.85. So what do we have now? Well, the play now is between 35.58 and 38.25. So at any point in time, and this is what I use when I go ahead and I write my information as to where is the market, what is taking place. Well, price is above the major, is above the intermediate, and is above the minor. So I'm also looking at the level of minor, which you can see is just about here at the inflection point where we have the shift in velocity. So that would be a support level for the market. So that at any point in time, I can actually look and say, okay, where are we in reference to support and resistance using, not, we don't care about day trading. We're only looking in this case at a longer position for our trades. And you can go on, I'm going to just switch. If any of you guys want any specific symbol to look at, give that to me. I mean, I could actually go ahead and here and we're looking at 10 years of data, by the way. I'm going to just put Johnson and Johnson. I just want to see what they have. Okay. So Johnson and Johnson daily moved up, still at a high level. It had a resistance level shift at 11.9. Support level is at 136.99. Of course, the ones to the left really are support, can be support levels too, because there were shifts. A shift in velocity because there was either more buying or more selling, and that actually causes this type of change. What do we look as for support? Well, 142.43, which is the minor cycle. So this is still a bullish stock. And you can actually see all the levels, the movement down, movement top. What do we have? Well, there was a shift right over here. Look at that. I know some people like to say to the tick. I don't like to say that, but 146.80 was a level that was established right here on the left on basically January 31st. And it's basically doing a double top right now. So you can see as part of analysis, it's a simple thing, not a myriad of tools, but the tools that actually become helpful. Let me go ahead and put financials. So there's financials now, the same thing. You got levels of shift in velocity. I'm going to basically close this up right now. Okay, let's go ahead and now put another chart up here. The first thing we're going to do, okay, this one already has BloodHound. And the BloodHound template that I created has the slopes of the V2 cycles, where the cycles are above or below zero, complex slopes and cycles in the minor strength, intermediate strength, major strength, and then all of them, looking at major, minor, intermediate, both slopes and cycles. And we're going to go through each of them. Then signal, velocity force, all levels, signal level 1, which is minor, intermediate, and major, cycles greater than 0, cumulative, and those would be areas with an inflection. There was coiling and price breaks out. And I put 2 exits because the way that I trade, I actually I create my stops probably in a quirky way that most people would probably not think of. So what I said, just for modeling, why don't we just use the minor, intermediate, and major cycle? So major cycle exit, intermediate cycle exit. When it crosses over, it executes an exit or tells you that you need to exit your position. So if we look at the slopes, And I'm actually going to go like this. The slopes, all three of them are moving down. They move down to this level. Now they don't all agree, then they agree over here, moving up. So that would be all the slopes in agreement. Yes, up and down, but what it's showing to you is strength and weakness of movement. But what you're doing is you're looking in relationship to the intermediate cycle. And so what we can do here, since we're going to look in relationship to the intermediate cycle, which is cycle 2, we're going to take cycle 2 and we're going to go ahead and change it to L5 and click OK. And that looked at 10 years of data, and you can see it quickly recalculated. So now you can see in relationship to that, what happened over here. Finally, you had weakness, you didn't get strength against, you got weakness. And you can see weakness all the way up to the 31st of October. So we go ahead and look the same thing at the cycles above or below zero, which is the zero line, right there, all three above zero, bullish bias. They start breaking down. Basically, right there is a time where you tighten your stops. So it gives you warning throughout your trading with different views. Slopes and cycles, all of them the same type of thing. All cycles. And you can see all cycles actually will stay green for a longer period of time before you finally see. And anytime you see white, it's a time that you would probably look at your stops and analyze that. The one that is used for the signals is this one right here, which shows you solid green and areas of some weakness. When you actually see red, when it actually turns totally red, you actually have a bearish bias. So let's go ahead and just kind of pick something. Let's look at the NASDAQ. So that loaded, what are we at? Well, we're actually in a bearish bias on the NASDAQ. Prices are all have remained below the major cycle. You can see they just barely got close to the major cycle and then pulled back down. So those cycles actually act like resistance and support. And that's because of the nature of the extraction of the information that took place. So let's look at DIA. There's the diamonds. I like biotech. Let's see, XBI. So there's biotech. We're going to get to the point where we're going to look at this and in relationship to an analysis and whether it's best to trade long or short. And let's say we want to look at Apple. So Apple had a slight weakness over here, recovers, stays strong, slight weakness, and finally, that doesn't look right though. That drop right there, I probably have missing data. We'll deal with that missing data in a bit. So let's move this one out. Any questions so far as to maybe what do I use? And the one that I use, by the way, is the one that says cycles greater than cumulative. The next to the last one in there. Let's now look at Blackbird. And let's throw Blackbird in there. And just for the sake of analysis, and look at this. Let's say, okay, just to show you the data series here, July 4th, 2006. The original software was coded after June 26th of 2006. That's when I wrote the code. And I started trading in July. So far, so good. Okay, so now I loaded, you can see there's actually 12 years of data from the time of inception to now. And what we're going to look at says, okay, you're showing me a model over here. Is it any good? Is it going to work? Am I going to be able to make money? So I say, okay, let's go ahead and just check it out. Number one, what did I say? I do not use anything but, and in day trading, it's actually volume bars. But when I'm looking at something like this longer term, it's going to be either 60 minutes or it's going to be daily bars. We're going to do everything with daily bars. So let's say if I just look at my market once a day and I make my decision, what's going to happen? So I'm going to take and look at strategies. This strategy is provided. It's called the market timer. I want to put it in back test mode, show the chart traded on the right hand side. And okay, let me just make sure it's not on Sim. It should be on Blackbird. I'm going to enable it because of 12 years of data. It's going to take a little bit of time for it to calculate. Okay, so right now it's loading. So if you have any questions, just go ahead and start posting the questions. Um, we have a good amount of time left on this, but it'll be good to actually look at specific items that you may want to look at, and we can actually look at certain models and see whether or not they would be profitable had you been buying just 100 shares back in 2006. Okay, there we go. So we bought this in 2006. You can see the markers there. I'm actually going to turn the level 3. You can see the green. That's actually what's doing the buying and the selling. So I'm going to put no logic just so we can have a nice white screen. And we can see the lines there. So now what I'm going to do, let me just go ahead and go like this. Blackbird's at the bottom. It's using the market, the actual name of the um, BloodHound template is called a V market timer. So we go now and right click and we said strategy performance Blackbird historical. That's on another screen, so I'm gonna bring it over. Maximize it. So if we had traded basically long and short, all the trades, we would make $1,925. What I always like to look at is, is it better to trade longs or short? So let's look at the analysis. And the principle to me, at least the way that I look at things, is when the market is dropping, you're catching what? Sharp, you're trying to catch a knife. Somebody threw it at you and you're trying to catch it as it's falling. It's gonna hurt you. So what I do is I say, okay, let's go ahead and look at the data and let's look at longs and shorts. So basically this one, yeah, I made some money. I started in January 2007. You can see there was a little dip there. I made a bunch of money, right? Right there, almost 9,385. Then it dropped, and now the same model, it doesn't show us what, yeah, there it is, 1,925. But say, let's look at shorts. If I just traded shorts, I would have made a certain amount of money, 5,594. And then now by the time I'm done, I've lost 7,600, which is a $12,000 drop. So now we look at this model, the market timing model, and we look at longs. And I think it's a little bit more impressive. Yes, we did have we had a drop right here. And let's change this to yearly. It'll give us a better idea. So in 2014 to 2015, we had a drop. But then after that, you can see straight up, and we have broken the 8,311, which is the maximum at this point. And sometimes okay, it doesn't want to show up. All right. So basically, market timing, based on our analysis here, works better if we go long and then exit at the time, so do some type of protective strategy when the market shows us a movement to the downside. Bought and hold. Mm, we'll have to look at that. Okay, Sam. So let's go ahead and minimize this. Let's go back to the beginning, okay? Because we can actually look at that. Actually, we can look at the transactions, and then we can take the difference. January 1st, 237 profit, gross profit, commission, cumulative max, average trade 35. Okay, that's actually going to be in. It's going to be in the trades. Yeah, 129. Okay, 129 to 280. Okay, so 129, 130, 280, 150. That's 150. 150 times 100. That's 15,000. So buy and hold would be 15,000 if you had held the stock and sold it at this point. If I'm wrong, just go ahead and let me know. But I believe that that's take the price today, subtract the price that it was before, because you still have only 100 shares, and the difference is times 100. Yeah. Now, buy and hold is maybe okay. I mean, this is just one of the many models that we could look at, one of the different symbols. But I generally dislike losing money and having something basically go up and down like that. So I try to exit and then buy. Try to. I know most people say you're trying to pick a bottom, but when you actually have structure as it builds from the bottom, the likelihood of you having a positive outcome is much greater. So let's see. Yeah, 133 actually was the number. 133 to 273. Yeah, 140. 14,000. It would be 14,000. Okay. All right. So let's look at this. The other thing that as part of the model, I just threw something in there, and I took the model. I have a piece of software that I wrote, but in essence, there are other pieces that you can use for basically support and resistance. This is the AMA trailing stop. And I made a change. The number here is 17. I cannot remember I think it was 14 days was the default. I changed it to 17. There's a specific reason for that. I won't disclose that, but 17 is a number that it would more than likely should be there. And that does provide you a good view. And you can see that in many cases it either follows the minor or the intermediate cycle. Let's jump back to the slides for a bit. And so let's change. Okay, here we go. So there are three suites. I know some of you already have Bloodhound. So there's a package that's specific for current Bloodhound users. There's one that is um, for people who want to buy a bundle with Bloodhound, and one that's kind of like the ultimate for people that want Bloodhound and a Blackbird. And I'll jump to that. We already looked at the main chart setup, and you can take a screen capture of this. There's a special promotion that's going to take one of them, and this is actually, I don't like this thing where let's close by Friday or by Sunday or whatever. So the offer will expire on Monday, and in essence, the market timing pack for people that own already Bloodhound is 635. Generally sells for 795. Um, there's a discount, 20% discount of $160. So the cost would be 635. There's the bundle price also if you don't have Bloodhound Ultimate. If you bundle Bloodhound and the empty cycles, it will be 1590. There's a 31% discount, and on that one is 1095. Now, if you just want to have everything there is to be had, then everything from Bloodhound, in other words, Blackbird and um, it's Bloodhound and Blackbird from Shark Indicators, plus the Cycles MT run to 2790 if you bundle them all together. As a discounted price, is a 33% discount of $930. So the price for that is $1,860. It includes all the templates. It includes a good number of items. Now, where do you go for that if you are interested in? I want to put a couple of things. First of all, the website, and there's a button on the site that says Bloodhound, and so click on that, and it'll show you the pricing, the promotional pricing, and just click on them, and uh, it'll send an order to us. Within 24 hours or so, you'll get your license for Bloodhound. 24 hours, tomorrow is when the software is going to ship. The other thing is, let's say you want to know a bit more. There's going to be a follow-up webinar, which is going to take place tomorrow, and it would be basically looking, more questions, and I'm going to post that information here. So you can sign up. It'll be tomorrow at 11 a.m. Eastern Standard Time. And we would cover a bit more and maybe even touch on some of the other indicators. But the focus right now is only for people that are holding positions. Now, if you want to look at older videos, which deal with a bit more on day trading, you can go to the YouTube channel for iCinDER Trader, and that link is also there. With that, we can close up, and I put the information there on the follow up. There will be a bonus indicator also tomorrow available for those that show up and sign up. Now, if you cannot make it, just go ahead and sign up, and you'll have access to the video. It'll be posted in the YouTube channel. And with that, we could actually touch on more questions on whether it be iCinDER or something else you may want to know about. So mics are open, and type your question in the chat, please. Okay, if that's the case, you just go ahead and go to that site, and the price is going to be 635. And you make sure you call me, Stephen, and because actually I have something else for you that you and I discussed a couple of days ago, and it'll be 6:35. BA, okay, okay, Gary. So we still have the chart here, so let's just put BA. Okay, so that's BA, and since we can actually just go ahead. Let me see. I think I have strategies on this one too. No, so let's go ahead and add strategies. Shark indicators, Blackbird. So Blackbird settings, we're gonna pick the market timer. Click on open, backtest mode. Make sure I put in my Blackbird enabled. It's gonna take a bit of time because it's gonna load 12 years worth of data. Steven, you can call me after the webinar, okay? Or you can call me tomorrow morning. Okay, so there we are. So let's look how this would look in our model. Okay, you trade both longs and shorts. You see that 59.15 using this model. Now, needless to say that remember what the assumption here is that I put the stops are actually based on the cycles. You may be using some other model for stops, which I do. So this was just to show is the model useful and can the model make money. So let's go ahead and change this now to analysis and just go ahead and change this to long only, and let's go into yearly. So basically 2012 slight loss, 2011 to 2012 kind of flat, and 2016 is when it took off. And you can see any gross losses and cumulative net profit. So 17,468 is just basically taking longs. If we take shorts, we would have lost $11,553. That's being contrarian to the way the market's moving. So basically, the way that looks is like most of us and then the big players are basically bullish on the market. And so they buy low and sell high, as we often hear. So in based on this here, it's telling me that I am better off looking at individuals, companies, and just staying long. Uh, the charts are not showing. Hmm, okay. How about now? Okay. Okay, good now. So let me move this out of the way. This is basically BA, which was asked by one of the customers here. And so now if we go and we look at it, and we're looking at yearly, we're going to look at both model of longs and shorts. The cumulative amount would have been 59.15. So now if we go ahead, and that's always good to look at, shorts. If it's just shorts, it's a money loser. If we look at longs only, then we have a positive outcome. And what we're looking at is to have a positive outcome. As the question was posed a while ago, was that what if we look at this from the perspective of buy and hold? So that you'll have to do that comparison yourselves. Gary, do you have any other questions here? And I mean, we can pop any symbol in here. It really doesn't matter because okay, here's number one. What are we doing? We're taking a rule set. What is applying the rule set? Well, that's BloodHound. Then we're taking that rule set and we say, okay, if we were to use it in such and such a way, and we put our own stops and whatever else, can we expect a positive outcome? And so basically we're doing is we're using Blackbird to evaluate whether we can have a positive outcome on a specific model. And we're looking generally when you want to establish something, like let's say that you were applying for the Dow award, and then there is a real award, by the way, from the Market Technicians Association, and you basically have to look at 10 years of data, and the 10 years of data have to show a positive outcome. And so therefore, if you create a model and you test it this way and you see a positive outcome, then you say, okay, the model is a model that implies a positive outcome. Can it be negative? Well, yes, because based on 10 years of data, it looks like this. The 10 years of data in the past may not necessarily be the next 10 years of data. But nevertheless, there was a positive outcome. And we have looked at this, we're looking at 12 years of data. And so we could take and stick Johnson & Johnson there and look at 12 years of data. So I think I'll do that. Let's go ahead and J&J. Now I prefer usually to trade the sectors. The models like this, there are some ETFs that basically are dividend ETFs. So that's something that I would focus on. Others are basically the sectors. And of course, I think we all look at the diamonds and the spiders and the Qs. And those are models that have ample liquidity so that a model can work. So now we're looking at J&J. And so we're going to say, okay, the same thing, what would the model look like? I'm going to move it to the right. Okay, so here's the kind of a so-so model. Let's look at the analysis. We're all over the place with longs and shorts. If we just go long, this is a positive outcome. Of course, we have a lot of peaks and troughs here, but the overall movement is to the top side. Okay. So unless there are any other questions, I'm going to just go ahead and shut this down. So if you need to contact me, you can contact me through iCinDER Trader at rj5.com or through Skype rj5 group. You can send an email to support@icindertrader.com for a class schedule, or you can go to the YouTube channel and you can subscribe, and then whenever I have a webinar and I post it, you will have that webinar and you can look at it. If you that's just for some folks that are busy and they just like to look at this at other times. With that, I'd like to thank Shark Indicators for the time they've given me and all you folks for staying here for the presentation. I thank you, and I turn it back to Shark.
All right, great. Thank you, Raul. Appreciate you guys coming in. Hope you got a lot out of that. If you missed anything or just want to hear more of Raul's amazing voice, we will be sending out a recording to anybody who registered, probably later tonight, within the next few hours, at the very latest tomorrow morning. Keep an eye on your spam folder just in case it gets stuck in there. As always, if you have questions about Shark Indicators products, BloodHound, Blackbird, the stuff that Raul makes very good use of, you can always contact us through our website at sharkindicators.com. But as he said, jump on if you're interested in what he has to offer, jump on that soon, because it sounds like that's ending soon. So yeah, with that, thank you so much, guys. You have a great night, and see you next time.